Hey, everybody, welcome back. And yep, I'm in the hole again. Yes, probably going to go fishing again, which is the intent. And but I wanted to make sure we got your video out before we go out, play a little catch and release. Anyway, the question is, what's going to happen with mortgage rates? Because we've seen the lowest rates really all year long since Powell did his little revision of a conversation. Let's talk about that, and let's talk a little bit about what the heck's going to happen in our market. All right, so here's the thing. Powell kind of changed course a little bit based on some of the information that was given out. All right, so when we talk about mortgage rates, remember the Fed, they don't control mortgage rates. They control your car loans, your HELOC, home equity line of credit, your credit card payments, what banks lend to each other on a daily basis. And they also control, commercial lending, and which is the biggest thing right there. So for those folks are going to really benefit. However, the sad part is the last 4 times that the Feds dropped rate, mortgage rates actually went up. Not exactly what we want. So if we pop in here and we take a look at this, right? This is our mortgage rate watch section. You can subscribe to this. It's free. It gives you in real-time information, including par pricing. But really, at the end of the day, here's the thing, right? It says in not so many words, like several other Fed members have pointed out in recent weeks. Powell essentially said the labor market is looking weak enough to entertain a rate cut in the near future, even as inflation outlook remains somewhat uncertain. Very much what some of the concern has been is, hey, with these tariffs, hey, with everything that's going on, what the heck is going to happen? So when we pop in, when we take a look at this, this is August of 24 to August of 25 chart. You can see the left-hand side of the chart says Fed lowered rates, and you can see how it was low, and then the second they lowered rates, it went up. Then the other dip, so when it came back down, that's when the Fed's lowered rates 1/4 of a point again, went back up again, came back down. Fed's lowered rates again, boop, went back up, and it's been a slower, and I do mean slower, kind of decline with rates again. And so it's going to be super interesting, and I have a sneaking hunch that in September, if the Feds do drop rates, that we're going to see real estate mortgage rates actually bump back up again. So if you're on the fence about buying, if you're on the fence, with refinancing, rates are actually looking pretty darn good right now, and you may want to keep that in mind. Yes, I think in Q4 that they're going to continue in a downward trend again. However, again, it's just been super, super slow. So, just keep that in mind as you're rolling along. So let's take a look at some news titles here. All right. Existing home market still crawling along the bottom despite modest bounce. All right. So when they talk about the modest bounce, they're actually talking about the interest rate. We have seen some activity as far as sales volume increase. And understand there's a disparity, in different parts of the country and whatnot. And for us, we're still, in the top 5 as far as the sweet spot across the United States. Number 3 in a lot of things, including the highest number of taxes paid by, we're number 3 in the highest state in the union for tax. And I think, unfortunately, a few others were ranking right up. They're only behind California and New York. Super sad, but anyway, it is what it is. Let's continue on and get off my little diatribe here. All right. Incentives rise as builder confidence matches the lows of 2022. Okay, so understand in the new construction side, we actually have seen, again, as we get the latter half of the month, new construction definitely improves as they offer different incentives and whatnot. They do offer incentives here. They have we still have new plats going arriving Bar and one other in Mill Creek, which is a really nice development. They're coming in with some really competitive pricing and whatnot. So to keep that in mind as as you are looking at, and should I consider new construction, month end is always best to do that. Just remember, they do require you to have your real estate broker to register you, and definitely work with a real estate broker who's got your back protected. Builders, look, they're not going to offer you all the incentives that a lot of new construction real estate brokers are familiar with. So just keep that in mind. All right, let's get back to this. As we can see, 30-year fixed mortgage. Look, that's down to 6.52. It is my understanding it's 6.25 for a number of different lenders that are out there. And that's because they adjust it based on what their earning is for that specific loan. Big box banks sometimes have a better rate because they're looking to fill a specific portfolio of buyer, not only in price point, but also in credit score and income level. That's why the bottom right, hey, should I refinance? There's a calculator there that also lines up 4 different loan profiles, so you can look at them side by side. Watch the video on 5 questions to ask while getting quoted mortgage rate. Look, there's no marketing, there's no selling. It's just solid information that will help you save tens of thousands of dollars if you just watch it and ask those questions and follow the guidelines. That's all it is. But also ping me if you're interested in getting the 2 links to take yourself off of the list, that when you make a mortgage application, your phone will blow up. I mean, one client got over 100 calls in one day. If you do not want that, ping me and I will give you the 2 links that you go and unsubscribe. And you need to do that 5 business days before you make application. Okay, there you go. All right, but don't call me while I'm out fishing. All right, man, that's bad. Let me fish. Catch and release. All right, let's keep going. So when we take a look at our friend Freddie, so Freddie's 7-day running average, as you can see here, again, 6.58%, dead nut on where we were at last week as far as pricing, which is good. And then, of course, our year over year, we inched up just a tiny little bit. And again, understand that is going to be situation normal. In fact, when we take a look at the chart, right? When we take a look at this, let me get myself out of the way here. Okay. If we said that last year we dipped down into the 6s, right? And that's September technical, right? We're going to see a bit of an increase as you see the chart just almost went vertical like it did in 2022. That's when the builders and everybody else started to freak out because that's when interest rates started going back up. The funny thing is that is potentially what's going to happen, but short term we're going to see a little bit of a change when it comes to year over year with Freddie and whatnot. So don't be surprised. It's just one of those things. If we take a look at our running 7-day average, we take a look at the days on market and sales price, list of sales price. When you look up above, even the green colored one, which shows our year, for month over month. We're up basically 8 days as far as days on market for an average sales price. On the right-hand side, for the year to date, it's 37. So it's still a little good. The one thing that is different, we're selling for about 1% less than what we did last year. Now, when we take a look at actual sales volume, which is kind of important, look, we brought 1,004 homes on market. We took 1,128 off market, meaning we took 128 more homes, 124 more homes pended in the last 7 days than what came on market. That is a positive sign. Why? Because rates keep coming down, buyers are coming out, they're seeing the benefit of lower rates, and they're going to capitalize on that. As you're looking at that, your first buy down, which is normally just a couple of $1,000, super inexpensive, normally will buy you down like a quarter or somewhere in that range. So definitely look at that, but only if you're interested in saving money. I mean, there you go, right? All right. So when we take a look at the rest of this, we've got circled, contingent. That's a number that's higher than we normally see. And then, of course, back on market, was 143. Price reductions, 852. Not a big surprise, not this time of year. And then you're like, okay, George, what's happening here? We've got our Labor Day weekend next weekend, and people's minds, they are not going to be on real estate. So if you're a buyer, great time to go out. I'm just telling you. Feds haven't indicated that they're going to, they've hinted at what they're going to do, but mortgage rates are already building in right now that discount, that reduction in rate. Don't expect when the Feds, if they do drop rate, don't expect it to go down further. It's either going to stay flat or it's going to go up. They've already built that in over between now and when the Feds meet. Now, if, however, you're a seller, any buyer that comes out, that's a serious buyer. Make sure you are paying attention, because most everybody, they took the brain out on vacation because you got school starting, you got last minute vacations for the snowflies. We start slowing down real estate wise, technically until about the end of September. Not unexpected. Okay, keep that in mind. Not unexpected. Expect it to slow down. I fully anticipate it. Always happens. All right, moving on. So let's talk a little bit about the Northwest MLS. Let's talk about what we're doing trending wise. When we take a look at this, it is super clear to see our month over month, the middle chart there. You know what? Our average sold price is up, basically 1.3%. For the year to date, we're up 0.9%. And that's just about right. That's where we should be. When we talk about actual numbers themselves, look, sure, we started off August, suffering a little bit in the middle chart there. But, it was 6% last week, and we're now at 2.2% as far as fewer sales. And we're going to see that number continue to improve, which we said because at the end of July improved. And remember, your solds are what happened in July last month, just like the pendants here. We will see those numbers show up at the end of September. Super straightforward, super simple. Now, new construction. Okay, remember, at the end of the month, you're going to have your highest and best deals with builders as they try to get month-end numbers up, get those bolstered, and then that way they can report happy stuff to the shareholders and whatnot, because those are going to be your industrial builders. Your Horton, your Pulte, your Lennar, TriStar, and I'm forgetting what Toll. No, it's just what it is. So if you're out there and you're thinking, hey, maybe new construction's in my future, now's the time to consider that. All right. So when we come back, we take a look at this. Our numbers, new construction, they're just motoring right along. Cannot complain. And when we take a look at actual sales volume, look, pendants are up 0.4%. And we created, even on the solds year to date, look, we're up, or we're actually technically in down, which is good here. We want to be down because it was 14% last week, 13%. Now it's 11, which means that we had a 2-point increase or improvement as to where we're going. Bank owned. Look, guys, bank owned super boring. Why? We don't have a lot of inventory. There's not a lot of inventory out there, and that is a given because we're like number, I think, 4 as far as the least number of foreclosures, despite what our government is trying, or our state is trying to tell you. Our numbers are super low, and everybody. Anyway, I'll leave that one alone. So same as last week. Basically, the numbers are for the most part unchanged as far as what we had year over year, month over month. And, we just don't have a lot of foreclosures. We don't have a lot of people that are in default. And that's a good thing. That's a testament to, to the new guidelines that came out into, that were prompted in 2008, the DOD requirements and whatnot, and stress testing. And we've kept those requirements, even though, we're seeing some newer programs to allow for a little bit more affordability. At the end of the day, hey, it's all good. Keep that in mind as you're looking at and trying to help others and family members, like I'm helping my nephew with his house hunt, I should say. Those things, those are just all positives. And so keep that in mind. Everything is dynamic in real estate, as always. But if you have questions, put it down below. Smash that subscribe button. Do while I'm not fishing. Anyway, let me know what you think. In the meantime, have a great weekend. I'll see you on the next video. Take care.